It really is an interesting time in the property space at the moment. UK prime real estate looks like it's holding some relative value. The Swiss market holds its safe haven status, and the French market looks like it's making a quiet comeback. I met with 3 specialists today to talk about this in greater detail, and I asked them, who is buying, what are they buying, and what's the medium to longer term outlook for their markets? So Alex, let's start with you. How has the demographic changed for the Swiss property market?
Do you know, I think about 10 years ago when I started working in this market, people came to us initially on a tax move. They were looking for preferential tax arrangements, which the Swiss offer. But actually nowadays I think that's changed, with people now looking for safety and security in particular, for their family, for their asset, for their investment. And in the French-speaking part of Switzerland, we have a huge number of options for education.
And what kinds of property are in demand right now?
I think, like most areas, actually, the sort of historical property that's been renovated is the sort of the ultimate dream. But essentially, people are looking to buy sort of contemporary architecture, taking advantage of the full views, and because the Swiss are very good at constructing new product, which is very ecological, very economically considered, people are sort of more open-minded towards those as well.
And how are the headwinds of the market today impacting the medium to longer term outlook for property in Switzerland?
My only real concern, I think, is going back to that safe haven status, is the area of the currency. The Swiss franc is somewhere where a lot of our clients are looking to invest and park money into that currency. And I think if the currency becomes too strong, it could have a detrimental effect on the market. Generally speaking, though, the Swiss market, we've seen in particular the last quarter in Geneva, where more and more transactions are beginning to take place in that sort of 8 to 15 million price range, which hasn't happened for some time. So clearly you can see that that confidence is returning. And if you look towards the mountain market, actually we've had a particularly strong season in Villars and Verbier. So actually, generally speaking, I'm busier in the Swiss market than I've been for some time. So it's looking very rosy.
Rory, how has the demographic of the buyer changed? What are they buying? And how are the headwinds for the UK market impacting the medium to longer term outlook?
It's been really interesting looking at the changing buyer profile. If you look at prime London, for example, at the moment, 70% of our buyers over 10 million are from overseas. Between 10 and 20, for example, 40% of the buyers are British, 17% are from the Middle East, and 17% from Russia. If you go over 20 million, between 20 and 30, 22% of our buyers are from the US, strong currency play, and 22% from Europe. European buyers being particularly interested in family houses. Over 30 million, 31% of our buyers are from the US, and 17% from China. So strong international presence across the board in both apartments and houses. In terms of what they're buying, we've seen new demand coming through for lateral apartments, particularly lateral apartments in new build schemes with a full suite of services such as swimming pools and concierge and parking. On the other end of the spectrum, low build family houses in core family markets like Chelsea and Notting Hill, with proximity to good schools, good private schools, good parks, and possibly with a big garden out the back. In terms of the headwinds, the market's been held back by noticeable headwinds in the last few years. The peak of the market was 2014. Since then, we've had an increase in stamp duty taxes, so property taxes. We've had political uncertainty with the obvious Brexit. That's held back buyers. Sentiment has been down. We are seeing some of those fears subsiding in the market. So if the peak from a volume perspective in London was 2014, we think the low point may be 2018. So we see some buyers seeing this as a buy opportunity, spotting real value in the market. Chelsea, for example, is down 20% from the peak, and we expect it to be one of the best performing markets in 2019. So we see a real opportunity for the well-advised buyer.
Mark, how has the demographic of the French buyer changed? What are they buying? And what's the medium to longer term outlook for the property market, including how the headwinds are impacting that?
Over the last 10 years, I would say the demographic of buyer for Paris has changed quite dramatically. Firstly, by the age group, which has actually dropped significantly from probably late 50s to sort of late 40s. The second point I would make is that 40% of prime buyers today are actually French, which is an incredible change, of which 20% would be domestic and 20% would be the expat community returning from Asia and Northern Europe, etc. What they're looking for typically is a historic building, Haussmann or earlier, additional proportions, lovely facades, no vis-a-vis, i.e. good views, south-west orientation. Price is 2 to 5 million traditionally. In terms of headwinds, apart from the usual sort of hazards we face in Europe, Paris is looking pretty rosy. Prices have escalated quite quickly in Paris in the last 2 years, probably 15%. So there may be a little bit of a sort of pause for breath, but I would say, with interest rates low, values still attractive, and an expected 25% increase in ultra-high net worth individuals in Paris, I think, Paris residential is probably a good investment right now.
I hope you enjoyed the insights we heard today. If you have any questions, please contact your JP Morgan advisor.